Welcome to the weekly Crypto Check-In, your go-to podcast for navigating the wild world of cryptocurrencies. Hosted by Robert Swarthout and Andres Sandate. Today, recorded on January the 7th, 2026, we're diving into the latest market shifts, blockchain breakthroughs, and expert insights to keep you ahead of the curve. How's it going, Andres?
Hey, Robert. Happy 2026. Happy New Year. Things are good. You know, it's a weekend already. It's, as everybody always says, time just seems to speed up this time of the year with end of the year holidays for many and travel, and then just kicking off the new year. So I'm no different. But we're good. We had a good couple of weeks busy, but good to see a lot of family and friends, and now dive in full speed back into work.
Yeah, we had a good break as well. It's fun to get back. I was kind of ready for Q4 to be over. It was a rough one for crypto, but it's so far this first week of 2026 seems to be looking up. So that makes the morale a little bit easier, at least. So
the last couple of months of the year were not really a whole lot to write home about, especially when you see what's going on in other asset classes for crypto. It was sort of a tale of two parts of the year, right? We saw momentum early through, with the election in November of last, I guess 24, right. And then that sort of carried into the first quarter of 25. And then we got the first bill. We all thought, okay, by September, Labor Day, we're going to get another bill. And then things just, with the shutdown and then
tariffs
and the impact of the economy and what the Fed would do, the Fed chair debate, it got caught up, unfortunately. And then obviously there was just a lot of technical and profit taking and some squeezes, and fortunately not a big scandal.
Yes, correct. And the good news is we can even start with topics that are positive news, which is always fun. So our first topic here is it is now technically 54 consecutive days, but the XRP ETFs and the Solana ETFs have both had great runs, basically since they launched as true I guess standard ETFs back in October. But quite the streak. In this case, the XRP total inflows is 1.65 billion, I believe. And I don't have the Solana number in front of me, but it's a slow, methodical. It's nothing like taking off like the pent up demand that we saw for Bitcoin, I guess a year and a half ago, or goodness, 2 years ago at this point. But we will see how this one plays out. Again, we're going to kind of get to it in this next topic, but there's a lot of these waiting to come. So like funds will kind of get spread across many different things versus being so, pigeonholed into, at the time, only being able to buy 7 different Bitcoin ETFs. So,
hopefully this is, bodes well for continued momentum. I mean, it's a good sign for institutional adoption. And as we've talked about for several years now, just the narrative that Bitcoin is crypto and crypto is Bitcoin is largely the view for, I would say, the masses and the majority, maybe even of advisors out there. Certainly the ones I'm exposed to, if they're doing anything in crypto, they're largely doing just Bitcoin, probably because that's the asset or the token that their clients are familiar with. So why try to do anything beyond that? But I'm optimistic that the 26 narrative, I think you've got some views on this. You shared with me offline around what the themes will be for this year, but I'm feeling excited and bullish around the notion that more and more folks, advisors and investors, are going to start to recognize, and this is a good headline to support that, hopefully, that the crypto is much more than just Bitcoin, and there's a lot of interesting things and exciting things happening.
Yeah. And, if there's any sort of like second positive to this of sorts, is there was a couple really nasty down days in the crypto market over this particular streak, and they continue to have inflows every single one of those, at least market open days. So cool to see. And we'll see how long this lasts. I'm sure that the bigger this number becomes, the more news it will become. But we'll see how that goes. So Moving on to our next topic, kind of admittedly along the same lines, but so there's a lot of ETF applications out there, over 130 to be
Isn't that
exact.
amazing? 130 applications out there.
You know, and
Used to
some of them are
celebrate
for
one got submitted and one approved.
correct. Yeah, so some of them are for spot products, so spots, pick your token. There's a lot of them out there, from different, obviously, sponsors as well. But there's also index products. There's 2x, there's positive, 2x negative, or excuse me,
Yeah,
short.
inverse. Yeah,
Yeah,
leverage.
so there's all sorts of things coming. It's going to be interesting this year to watch it. I think one of the big ones that I'm most interested in is the different index products that are launching. So, there's already the Bitwise top 10 index is BITW.
Yeah.
But you're going to see, every flavor of index you can think of. And I think you'll start to see probably in the second half of this year, ETFs that are index based but are sector specific. So you're going to get your, pick your sector. It may be gaming sector, it may be commercial adoption. Who knows? We'll see. But I think that will be kind of the next evolution of that.
Yeah, the exchange traded space has just been absolutely on fire in recent years. I mean, I've had numerous conversations with wholesalers and folks on the distribution side of a lot of these asset management firms, not specifically to crypto, but just in ETFs in general, where this whole wave of direct indexing, where you can create a custom index for your practice or for your client base and exclude or include very specific sectors or themes or areas, and you read any number of headlines around the major financial news and press, and it's just like this rise of the retail trader. And we used to see that, right? Like around COVID, post COVID, we saw that there was movies made and there was a lot of meme stocks and things, but I feel like we're kind of back in that same sort of euphoric area where there's a lot of interest, and as a result, there's never going to be a shortage of products created to meet that demand or that interest. And it's just a matter of how many of these actually make it a year, 3 years, 5 years. Too early to tell. But yeah, it's amazing what's happened in terms of this exchange traded space with crypto in the last 12 months. Certainly a shift with the regime change at the SEC.
The SEC, and we'll get to the SEC and CFTC later, because there's been even more change there. Many say both positive, some might say one positive, one negative, but
yeah,
we'll get to that in a few minutes. So our next topic caught me a little off guard. I didn't expect this one. So apparently the DOJ out of New York may have broken an executive order where they sold $6.3 million of Bitcoin that was seized as part of, or excuse me, that was seized as part of a lawsuit they were in. I didn't expect this. I at the same time, I'm kind of not surprised. It's because it was the DOJ in New York. They tend to be a little more left leaning, and they may not want to follow this administration. It probably became a little political. The entertaining part of this was all the Bitcoin maxis out there were like losing their mind over why are we selling a strategic asset? I'm like, okay, I get that we call it a strategic reserve. Just slow down.
right.
There's probably more to the story we don't know. But yes, it was.
This was Bitcoin seized from the Silk Road.
This was big. I don't remember it saying Silk Road. Let's see. It was from a lawsuit. I don't believe it was Silk Road. I think it was something else. But yeah.
But you're talking about at current prices, I mean, in excess of $6 billion of supply, correct?
$6 million, 6.3 million.
Oh, million.
Yes.
Okay.
Yeah. So nothing, not a big number. Like there was far more tweets and emotion shared online than $6.3 million worth.
Okay, gotcha. Well, yeah, I mean, anything to stir up the Bitcoin maxi crowd. I mean, whether it's a friendly, a friendly move or anything that, I don't know, feels like it takes away from the ongoing march. And we're, like you mentioned, we're going to get to some of the developments at the SEC, and also, talk about just where I'd like to spend a little bit of time. It's not a headline specifically,
Mhm.
but just digging in around kind of what's transpired over the last 90 days, 180 days specifically,
Yep.
with respect to Bitcoin, because it's such a bellwether for the space.
100%. Yep. So on, on the topic of bellwether, I think that this topic, so the crypto market structure bill,
Hmm.
is being discussed behind closed doors in the Senate Banking Committee and the Ag Committee. I read right before we came on today that January the 15th, so a week from today, we
Yep.
will supposedly be getting the markup version, and they will start to potentially vote on it. There was negotiations, a closed door meeting between Republicans and Democrats yesterday over, I believe, the 5 or 6 remaining things that they aren't on agreement on. And again, this bill was largely already passed by the House, so it'll have to be reconciled, and then after that, assuming the Senate passes it, will be on to the president's desk. So all of a sudden, it felt so far away for so many months. Then all of a sudden, again, a lot can happen in a week, and it could also not happen in a week, and it could get voted down. So
Yeah.
we'll see. But it feels starting to feel a little closer.
Yeah, I mean, it's almost like somebody called David Sachs over the holidays and said, "Dude, come on, man, let's go."
Yeah,
Um,
that would be the lobbying group. That's who's
yeah, yeah, for sure. Well, I mean,
yeah.
when you step back from it, 10 years or more in the making, really, this
Mhm.
industry has moved, zigged and zagged. It's taken a step forward. Sometimes people would argue 2 steps back,
Right.
and I think now we collectively, whether it's whatever your particular interest and stake is in this industry, in this growing asset class, I think that you know there's a lot of people that grouse about the government and regulation, but when it comes to the financial integrity of markets and structure and the institutional adoption, and then therefore retail
Mhm.
investor confidence, I mean, there's so many things that are at play when it comes to our financial markets. At least in the U.S., they're still looked at around the world as one of the safe havens that's always up for debate. But nevertheless, I mean, hopefully we see this bill get passed here in the next few months, and it provides a lot of momentum for the remainder of 26. I remember talking about this several months back, you and I hoping that it doesn't get bogged down and become a midterm election issue, right?
Mhm.
Because those are looming out there at the end of the year. So we'll
Mhm.
see. We'll positive vibes, and hopefully this markup on the 15th leads to a bill that can get on the
Mhm.
desk of the president.
Yeah, and I saw what people believe is the 5 to 7 things that aren't in agreement yet between the Republicans and Democrats. Some of them seem like bigger issues to me, and some of them seem smaller. So maybe the list isn't as long as it might seem. But uh, you know, I, this obviously would provide momentum to the market. I've long held the belief that this is what will allow this cycle to finish its cycle, if you want to
Yeah.
use that analogy. I just think it's the brakes have been held on it for that reason. So hopefully we get it soon. And market structure doesn't just last for a cycle. I mean, this is a long term thing. So at some level, they need to get it right, even if it takes a little bit longer. So
Yeah.
the last thing I'll say on this, and I'm not a big fan of this, but I was reading today that some people are trying to get changes made to the Genius Act, which was for stablecoins, as part of this. I'm like, this is already complicated enough. We do not need to be messing with it. And really, specifically, the change you're looking for is the ability for stablecoin issuers to provide interest or rewards to holders of it, not just be able to keep it themselves. While I do think that should happen, I don't think we need to complicate this one. We just need to get this one across the line and figure out how to fix that later. So
Yeah, do an
we'll see how
amendment
that
later.
shakes
I
out.
agree. Yeah.
So next topic, Bank of America is recommending a 4% allocation, Andres. That's an aggressive one to start with.
It sure is, and as we were talking about this, I remember when we used to put 1%, in these
Right.
headlines, and
Yeah.
it was, like, first of all, the fact that they are recommending a 1% allocation, and now it's almost like which of the wirehouses can, come
Mhm.
up with a more aggressive target? I don't know. everybody has a different point of view when it comes to advisors. You know, I from the advisor perspective, I'm curious who the who the profile is from a client perspective that's going to hear their advisor pick up the phone and call and say, "Hey, we just got approval to, you know, up your allocation from 1 to 2% or 2 to 4%."
Right.
I'd love to know what the profile of that client is. You know, are they heavily invested in tech? Are they heavily invested in alternatives? Are they, you know, a $10 million household? Or are they $100 million household? Or
Mhm.
are they the investor, you know, if you will, down the street that's just, you know, socking away money in a brokerage account and has a Merrill Lynch advisor, you know? So there's a lot of
Right.
people that do that. It's really curious. And I'm also wondering, and I'd love to get your take here, is this a little bit of a play on the fact that you allocated to Bitcoin 2, 3 years ago, that 1% allocation, while last year was rocky,
Mhm.
it's overall been a pretty, you know, decent performing asset,
Right.
and you're now sitting at a 3% allocation. What do you do?
Right. And they don't wanna recommend, taking gains there, right? So
Right.
they're like, the new allocation's for, so you need to buy more actually. Don't sell any, please buy more.
Yeah. And there's only, well, depending on what reports you follow, there's reportedly only 4 approved
Yes.
Bitcoin ETFs, right? So when we say Bank of America is recommending a 4% allocation, I don't know that we have found evidence out there that they're saying 4% to a specific index or a specific basket of
Right.
tokens. It's more these particular Bitcoin ETFs.
Yes, correct.
Yeah.
And I would imagine that list gets revived over time, specifically because there's 2 applications I saw that got submitted recently for ETFs, a Bitcoin and an Ethereum one, by Morgan Stanley. So they'd be able to sell their own products back to the clients.
Mhm.
So
Yeah.
anyways,
Well, it's another sign that there are major institutions that are, you know, stepping into, you know, if you look back over the last 5 to 10 years across different alternatives and non-traditional assets, I mean, this is an area that has done decent, right? Overall. And
correct.
so, yeah, last year wasn't maybe everybody's favorite year, and certainly maybe doesn't go down in history as the best performer in the long run that will be Bitcoin or crypto. But the fact that these institutions are stepping out now with 2, 3, 4% allocations, and Bank of America is not alone, speaks to the market's acceptance that the space isn't going away.
Yeah, agreed. And it's we're still early innings. I always have to remind myself, it feels like I've been in this forever. And at some level, by definition, it's been a long time, but it is also very early. We don't even have literally laws around this stuff yet. So
Yeah.
I got to, again, remind myself quite frequently about that.
Yeah,
So,
yeah, you do have to step back out of it because, yeah, I mean, we're going through this AI revolution right now, and
mhm,
people are still trying to make sense of that because it's changing so rapidly. And to some extent, there's some parallels when you look at the crypto space. I think it's
yeah,
harder to kind of grasp and get your arms around because there aren't these 5, 6, 7, 8 mega publicly traded companies that are in the news on
mhm,
CNBC, on Bloomberg every day, where we're talking about chips that, you know, kind of impact our daily lives, right?
right.
And the AI tools and models that more and more people are using in some respects.
Yep. Indeed. Our next topic is potentially a positive one for crypto. I wouldn't say it's a negative one, but it could be nothing. So we've had uh, uh, Carolyn Crenshaw. She was a commissioner at the SEC. She left, which now leaves an all GOP led SEC for 2026. I'm guessing that Trump will try to fill these seats with some nominations, and we'll see how that goes. But it's she was very anti crypto, even anti Bitcoin. So it's kind of nice in some ways. It's like shutting that the chapter on that of the anti
That
crypto
era.
era.
Yeah.
Yeah,
Interesting. So
but
are
again,
there two open seats now on the
there's
commission?
2 open seats now,
Yeah.
yeah. So it's currently a 3 people leading or chairing with Adkins being the top there. So,
Yeah.
yep. And
Well, I
I
would think that there's going to be no shortage of candidates that want to be in these roles. I can't pretend to know all the all the candidates and who they are, but you'd think that at this pivotal time in terms of making, I guess, making an impact on a space that could be pretty consequential over the next 5 to 10 years, there would be a number of folks that would raise their hand and say, I want to be a part of it.
Hmm.
Obviously, they're going to need to be part of the GOP and probably in step with what the administration's whole view is on this space in terms of pro crypto, pro growth,
Hmm.
less regulation. But it would seem that there are a lot of those candidates out there that would be interested.
Yep, I would agree. So our next one, kind of staying on the regulator standpoint, is Mike Seelig was confirmed at the CFTC. This one took a while, not because it was
Yeah.
Mike took a while, but the guy that they tried to get in before him sat there. I think it was Brian Quintes, if I'm not mistaken, and wasn't able to get through. So the Trump administration pulled it, changed names, and resubmitted. And at the end of the day, the CFTC is likely to be or have a more prominent role in regulating crypto. So this is maybe one we care about more than Crenshaw leaving the SEC, for instance. So,
Yeah. Yeah. I mean, I completely agree. I mean, I think a lot more people are going to start understanding who the CFTC is and following
right.
that. I think for so long, the whole regulatory conversation in crypto has been largely just the SEC.
Hmm.
And I feel like I don't know. It's probably how people feel about college football to some extent, although this year it's changed a little bit.
Yeah.
The SEC hasn't fared as well in the college football playoff. But when you talk about, it was just SEC dominating the crypto regulation,
Hmm.
and maybe to some extent that was, Gensler's felt like this was his mandate, and he kind of wanted to dominate the conversation. But that's changed. And, you see Atkins out there, current SEC commissioner, but I think we're going to hear and understand a lot more about the CFTC and who the leadership are and their agenda. You would think in order to get this bill across the line.
Yeah. It's I like that these seats are getting filled. It still seems crazy to me that it's been effectively open for a year.
Yeah.
It took that long. So, anyways, our last topic is we're going to talk a little bit about these Bitcoin digital asset treasury companies. We've talked about it an episode or two ago about how they had a rough last couple months. Well, as of this data is towards the end of December. It's not exactly the end of December, but I think it'd be good for illustrative purposes. So MicroStrategy was down 70%. Largely all this since July. So it wasn't even a full year to have to come down this far. And then NACA, so NAKA is another one, ASST, and then a third one, MTLPF. So down 80%, 93%, and 99%.
Wow. There you go. Have you some DAT?
Right. So, we speculated, so probably about a month ago, like what was driving this, right? Like,
Yeah.
And it was the rumor or the, I guess, the risk that digital asset treasury companies would get removed from basically being an index that required the automated buying by different types of institutional investors.
Yep.
Well, as of, I want to say today, it might have been yesterday, they said for at least the 2026 review, they're staying in. So Bitcoin, which is what you would have thought that, like, if those were truly tied together, like I had thought they were, that there would potentially be an immediate change in Bitcoin, like, because Bitcoin likes to trade on the second, not say on the day, right? So it didn't. MicroStrategy and Michael Saylor obviously was the first one to kind of start tweeting about this because he's got the most vested interest here.
Yeah, I was going to say he's got a lot there on the line.
Yeah. But we'll see how the next couple of weeks go, because being down just 70%, and say just in air quotes there, it's got to not be fun. It's trying to, like you had said earlier, how Bitcoin goes, largely how the space goes right now. So, whether you like Bitcoin or not, or whether you like MicroStrategy or not, you kind of, but you do want crypto to go up, you kind of have to care about these two right now. So.
Yeah, I mean, I like I've mentioned to you last year, in this some extent, I feel like this whole MicroStrategy strategy, I guess as they're now known, this whole thing just to me is the, almost like the SIFI too big to fail, long-term capital management all over again. I mean, these guys have almost put themselves I was telling somebody yesterday, I don't know, my view, and just one advisor, one person's opinion, like, I just feel like they've put themselves in a position almost where they can't fail. Um,
Mhm.
and, they certainly could. Anything could happen,
Yeah.
right? But in a way, so much is now tied to Bitcoin,
Mhm.
because the industry has just grown up around this one token,
Right.
that, man, to think that, okay, whatever percentage they own of the outstanding, do you know what it is off the top? Like 6%?
I think microcharge is around 5, 6%,
5,
something like
6%.
that.
Yeah, I mean, to think that somehow that goes away, I mean, I don't know. To me,
Yeah.
it 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 doesn't seem possible at this point. So, does that mean that it's gonna ultimately all work out? All those,
Mhm.
investors are gonna do fine, do well? I don't know. It's obviously largely tied to sentiment and what
Mm.
happens to the price of Bitcoin, over time. But, yeah, you just don't see this happen in other asset classes.
Right. So this is not on here, but it's the topic of Bitcoin. Let's talk about it real briefly. So U.S. a little politics here. U.S. Venezuela issue, right? All the
Yeah,
stuff going on there. One of the things that I found fascinating about it is there is it seems like a relatively substantiated rumor that Venezuela had amassed a holding of 500,000 Bitcoin. Okay, that puts them right at I do my math here, 500,000. That is a 2.5% of all outstanding Bitcoin they'd be the holder of. That's a lot of value sitting there. Not to say that's the reason why the U.S. went and did the Venezuela thing, but it's just the crypto twist to it, I guess, is
mhm.
yeah, I did not expect a crypto twist out of the Venezuela news. So
Crypto just works its way into everything
right.
geopolitically these days.
Yeah.
Yeah, I haven't done enough, of the reading around, what assets, I guess, are there, or what they potentially, they being authorities, the Justice Department, I guess, other US officials, as this whole thing is being sorted out. I've read the headlines around oil and the reaction to, the posing of Maduro, with respect to
Mhm.
oil. That's been the major headline I've
Right.
read. So, yeah, pretty fascinating. I mean, obviously, more and more governments, more and more institutions we know, this has been something we've covered. Have built, treasury holdings of Bitcoin. So it doesn't surprise me that some of these governments,
Mhm.
um, particularly ones, not don't know enough, but particularly ones that might be using Bitcoin, around, the margins for trading, or arm sales, or who knows what, right? I mean,
Right.
but it's the asset that kind of does lend itself to, being able to transact, and it be a little bit, let's say, hidden.
Yeah. Absolutely. Cool. Well, that's a
Man,
wrap.
we've got a lot to look forward to in 26. I can tell, man. We started with 53 days of XRP and ended with, which government owns how much Bitcoin.
Bitcoin, right.
It's
Yeah.
crazy.
So I imagine that won't be the only time we talk about that. It'll be
Yeah.
interesting to see how that one shakes
Well,
out.
let me ask you, not a headline, but certainly always intrigued to hear your perspective overall when you think about, 26. What are your one or two key, I guess, themes that you're looking for or expecting to hear a lot of talk about?
Yeah, this is a bit of a continuing theme for me at least. So tokenization. If Paul
Mhm.
Atkins quote from a couple episodes ago where we talked about where he made the comment within 2 years all U.S. markets will be on chain, comes true. That's going to
Yeah.
start happening sometime soon, and that's tokenization by definition. So I do believe that will happen. You're starting to see that happen rather rapidly. Um, and again, it's going to go from you don't see much of it, and then the next day you're going to turn around, it's going to be everywhere, because all it takes is Nasdaq to turn on tokenization, and all of a sudden you're going to really feel it. And then obviously other big markets will do it. So there's that, and then you know, just to me, it's a catalyst, right? Like this whole thing, the market structure bill will kind of unlock, will in some sense be the final unlock to allow innovators to really come in the space and try to figure out how to intertwine and use crypto in positive ways within the financial system and also not in the financial system. But we're getting closer to that. I look forward to the day where I have to figure out what else is the next thing after. But right now, that's the one that I'm focused on. So
yeah, so tokenization, and when we see the market structure bill,
right.
get marked up and on the desk of President Trump.
Yeah, I mean, U.S. economy is important, right? 25-ish% of global GDP is currently in all the tangential stuff that touch dollars right now. Really can't use crypto as much as it would like. So I think that's coming soon, and maybe rather soon. So awesome. Well, that's a wrap for this episode of the Weekly Crypto Check-In. Keep updated with the latest crypto insights by searching for Teton Crypto Capital or the Weekly Crypto Check-In on your podcast platform of choice. Leave us a review to share your thoughts, or like Teton Crypto Capital LinkedIn page for more updates. Until next time, take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.